All right, if you or a loved one is planning to borrow federal dollars for higher education, you do need to pay attention to this story.
That's because borrowing limits and hardship programs are seeing some big updates. Allison Gormley tells us what's the deal with who is affected and some of the deadlines.
Now that the One Big Beautiful Bill is signed, present and future federal student loan borrowers will see some changes. First, borrowing limits. For those beginning graduate programs on or after July 1st, 2026, your max is $20,500 per year. Professional and medical students, it's up to $50,000 per year. With Parent Plus loans, you can borrow up to $20,000 per dependent per year. Before this, borrowers could take out loans up to the full cost of attendance.
Much of the rationale behind these changes is that by reining in how much people are able to borrow, that will incentivize colleges and universities to lower their tuitions.
Kate Wood with NerdWallet said undergraduate limits are staying the same. Another change? The number of repayment options are being reduced for both graduate and undergraduate loans.
Instead of having multiple options where you'd be weighing what your costs would be under different plans, the idea is that it'll be simpler to simply have one standard repayment plan where your payments are over 10 years, and that's that, and then one income-driven repayment plan.
Programs to help people dealing with unemployment and economic hardship are also seeing cutbacks.
We good, sir.
This affects those getting a new loan on or after July 1st, 2027. Deferments, which would more or less pause the loan and its interest, are going away entirely. Forbearances, where interest keeps accruing while you can delay payments, will be limited to 9 months in any 24-month period. Restrictions to keep in mind as you plan your future.
All right, well, just to note real quick that deferment, that was specifically for unemployment. Deferment for things like cancer or military service, that will still be available. But these are the broad terms, and your terms may be a little bit of different if you're in a program right this moment.
Well, you know, I was looking at some of those numbers you had there. For example, graduate programs, the limit was $20,000. Okay. What will you do if the federal loan isn't enough? Because these graduate programs are 60, 80,000 and more.
Yeah, your options are you don't go to that school, you don't go to that program, or you seek private loans, and private loans work very differently than federal. For example, you need a credit score. For federal loans, you don't need a credit score. Rates can be different, and you know, they don't have as many protections, quite frankly.
Right, and it's hard to have a credit score if you're just coming out of college.
Yes,
Yep.
and you're trying to get it going.
And that's where parents try to help and then end up not saving for their own retirement unintentionally. And
Right.
it's a whole thing.
Which is why you need to be catching Allison's What's the Deal segments. Okay, her show is streaming on WTHR Plus. So download the app right now on Roku, Fire Stick, and Apple TV so you stay financially astute, Rob.